What's up, people? I'm not going to say traders because I'm really thinking about investing here, but welcome to Tibu Invests. All right, no, Tibu doesn't invest. He thinks about investing and decides not to because he's cautious, feeling cautious. So what I wanted to talk about in this video, or what I've been thinking about, is feeling a little uncomfortable for 2025. That maybe could be a bear year, but not just 2025, but over the next 10-20 years. I'm thinking at some point there could be possibly not just a correction, but history repeating itself and some kind of major market peak. I'm going to talk about the history of things a little bit and measures of peaks. And it could be, we could say, this time is different. With quantitative easing and printing money, stocks can only go up, crypto can only go up, gold can only go up. Is this time different? I don't know. So a little bit of history. Gold had an insane rally in the 70s into the early 80s. And then had a 20-year bear market. If you're a gold investor, you're underwater for 20 years. Tough to do. I mean, that's if you bought at the high and you never added. But for the NASDAQ, you guys know, okay, the COVID crash, go back before the 2008 financial crisis, go back before the dot-com bubble that burst in 2000, hit its low in 2002, but it didn't recover the loss until I forget the year, 2012 or something like that. You're underwater for 12 years potentially if you bought the wrong time. And now we go back further. We have the Dow Jones. The Great Depression, something that accompanied the Great Depression, was a huge stock market crash. The stock market peak to trough in the Dow Jones went down 95%. I don't know how long it took to recover to make a new all-time high, but I believe it was decades, over 20 years. So those things could happen again. And we could say, well, things are different now because they're just going to print money. And you could also look at Trump and say, Trump loves to pump the stock market, and they've got all three bodies of government aligned to push through legislation, stimulus if they want to. But we could also go outside of the best assets and look at, there's different stock markets in history that collapsed and went to zero. There's a Soviet stock market or something like that, the Russian stock market, Italian stock market. We're talking failed nations that go to zero. Those things could happen. I'm not predicting it. I'm saying it's a possibility, though. And I want to be prepared for those possibilities. What does that look like? So we look at there's a couple of metrics you can look at to say, I think this market's overbought or oversold long term. One of them is the price earnings ratio. I believe right now the price earnings ratio on stocks is over 30, and the historical norm is 16. I think there was a bear market in the 80s coming out of the bear market, and the PE ratio, average PE ratio, was like 8. So it's what, 300% higher now. Just something to be aware of. There's also the Buffett indicator. So the Buffett indicator looks at total stock market capitalization and compares it to gross domestic product. And it should be roughly 1-to-1, right? Because what is our gross domestic product? It's our companies. Correct me if I'm wrong in my interpretation of that, but that's the general idea. And it's the idea that over 100%, stocks are overvalued. Under 100%, they're undervalued. I forget, but maybe 2008 at the bottom, it was like 50% or something. What is it today as I'm recording this video? 165%. Total stock market capitalization is worth 65% more than the USA GDP. Does that make sense? So historically, things look overvalued. And we could say, well, we had the 2000 and then down and then the next push up. Honestly, still crypto is very speculative and there's still a lot of trash in there. Do we need 100,000 different coins? Should memes be worth more than multinational corporations? Should memes be worth billions and tens of billions? Can they reach hundreds of billions, memes? Could they, should they? I don't know. But I'm not going to just assume. Who knows? And you can say, hey, they're just going to keep printing money. And you're right. They're probably just going to keep printing money. However, most of the bear markets I talked about, with exception of the Dow Jones in the 1940s, 30s, what was that, 39? With the exception of that, the money supply was expanding. The NASDAQ drew down like 80% while the money supply was expanding. And you say, well, they're cutting rates. Well, they're cutting rates with the dot-com bubble as the market went down. They're cutting rates with the 2008 as things were going down. I am feeling cautious, especially after 2 monster years. Last year, 2024, the biggest up year on an election year. And almost 100 years, the best year. Why should the next year be a repeat, right? We even in QE, we still get bear markets. There were a couple rough years. One of them was 2022. Crypto dumped like 75%. The broader markets dumped like 20, 30+%. So I'm not interested in entering right here early 2025 as a buy and hold. It could definitely work, but I'm concerned I'm going to be underwater for a year, 5 years, 10 years, 20 years. Who knows? And one of my filters, so I want my systems to be protected against this, and not just to try to rely on intuition or fundamentals about market tops, but something as simple as, if an asset is under its 200-day moving average, you are not in a position and you do not buy. Something as simple as that keeps you out of these major bear markets. Yesterday, I was on the charts and I was looking at our system, Market Timing Pro, that one, and I was checking that filter for NASDAQ, looking at the 200 moving average filter. If you had that filter on, the last position you were in was in, I forget the month in 2000, but you're out of the market for 2 years. And when you finally re-entered the market, the price of the NASDAQ was 70% lower. And that's from simply having a 200 moving average filter. So that's one of my protections going into 2025. Now, one of my concerns as well is if that happens, it's going to evaporate a lot of riches. People are going to feel poor. It could cause a recession. The Great Depression was potentially caused by a stock market crash. Everyone, the shoe shine boy, everyone was in the market. Everyone was investing. And it made people poor, and when people are poor, they don't want to spend money. These are things that could happen. So part of my protection is to be prepared for lean living. And I believe the best things in life are cheap and free, or you get paid to do. Have many streams of income, and most of all, to be adaptable. I've seen it before. You might think you made it and you haven't. The stock market goes to zero, you go with it. Your gold is stolen. You lose your private keys for your Bitcoin. The exchange rugs you. These things happen. Your apartment building is burned down and your insurance is denied. These things do happen. Adaptability is key. Charlie Munger, one of Warren Buffett's partner, Charlie Munger died last year. I believe he was 100. Made it to 100. He said something along the lines of, my life is much better for having spent a lot of time worrying. Or I worried a lot in my life, and my life is much better for it. Consider things that go wrong. I mean, if I'm 34 and I'm going to live to 100, I've got 76 years. What do we think we might see in the next 76 years? Which nations will fail? Some will. Will the United States fail in the next 76 years? What do you think? What's going to happen in 76 years? Bitcoin is going to be coming up on the block subsidy going to zero. How is it going to survive? What's going to happen to the U.S. fiat currency, the U.S. dollar? Is the U.S. going to be dominant? What's going to happen to tax laws? Is Hawaii, where I live, is it going to be livable, or is there going to be hurricanes that wipe it out? When you start to think ahead, it protects you. A lot can happen. A lot can go wrong. So, the question is, what do you see happening? What do you see going wrong? I want to be prepared. And part of it is living cheap. I don't want to need certain things cheap. I spend a lot on food. I also spend extra to live where I live. I live on the beach in Hawaii. But beyond that, cheap living, don't need jewelry, don't need to travel a lot, don't need fancy clothes, don't need an expensive car, don't need a lease on a car, so on and so forth. But bring it on. We'll see what happens in 2025. You guys know my plan. Although I'm not going to trade MTP myself manually, actually. I have it trading in a bot. The plan is algos only. Moving forward. Free up my time. Something about trading is just not good for my mental health. And that's okay. I don't need to do it. I'm talking about putting on the trades is not good for my mental health. Thinking about it is fine. Making systems is okay too. Comment down your prediction for 2025. Maybe I revisit this video next year, but my prediction is 2025 will not be as bullish as 2024. I don't even want to say that because I don't want to create like some kind of investment. I really just want to be adaptable, because if the markets rocket, I want to be able to participate in that too. The 200 moving average filter will protect me. Anyways, thanks for listening. Talk to y'all soon. Much love. Peace.